got an article right here from Benzinga. I'm sorry, Benzinga. And it says, as Twitter's revenue collapses by 84%, Tesla bulls fear Elon Musk will liquidate more Tesla stock, bringing its value down for everybody. Twitter's revenue collapsing by 84% is wild. How does your revenue go down like that? How do you mismanage a company like that? Like, that's crazy. You know what I'm saying? So now here it says Elon Musk is facing serious financial problems at X, formerly known as Twitter, since he bought the platform. Its revenue has dropped by an incredible 84%. Now, let me ask you guys this question. What do you think contributed to the drop in revenue? Is there something in particular that might have just turned people off from X or what? Creating this huge financial gap that Musk might have to fill by selling more of his Tesla stock. Now, if he sells more of his Tesla stock, then what's going to happen is he's not going to have as much of an ownership interest in it. Right? This has some Tesla investors worried, as selling more stock would cause Tesla's value to drop, hurting everyone who owns shares in the company. All right. So I can only imagine what those board meetings are looking like. Musk bought Twitter for $44 billion, but turning the company around has been a big challenge. The New York Times recently reported that X made only $114 million in revenue in the U.S. during the second quarter of 2024, according to documents they obtained. This is a massive drop compared to $661 million in the same quarter in 2022 before Musk took over. After we account for inflation, that's a drop of a whopping 84%. Yo, that's crazy. If that was any other business and Musk didn't have any of those businesses to float this up, man, they would be down and out. They would be down bad. Shout out to Vampire Hunter Greg. What's good with it, bro? The main reason for this decline is that advertisers has pulled out largely because of Musk's controversial statements and actions. To make matters worse, X has sued some of these advertisers, which could scare off even more business. Okay, so we're going to take a quick look at this. All right, we'll take a quick look at this and listen to this video here.
Meantime, 7 of the world's biggest banks, a multi-billion-dollar loan, and one of the most infamous names in tech had all helped power the Twitter takeover in 2022. But 2 years later, those lenders are still on the hook. Deirdre Bosa has more in today's Tech Check. Deirdre?
Hey, Kelly, Twitter, now X. It is the worst deal in the Musk universe, purchased for $44 billion.
You guys hear that, right? Twitter/X is the worst deal in the Musk universe. Shout out to Shaka. What's good with it, bro? Now, do you guys remember when everybody was talking about how good of a businessman Elon Musk was and how this was just going to make such a difference? We don't even know if the lights are going to be on or not anymore. You know what I'm saying? It might be under new ownership.
Meantime, 7 of the world's biggest banks, a multi-billion-dollar loan, and one of the most infamous names in tech had all helped power the Twitter takeover in 2022. But 2 years later, those lenders are still on the hook. Deirdre Bosa has more in today's Tech Check. Deirdre?
Hey, Kelly, Twitter, now X. It is the worst deal in the Musk universe, purchased for $44 billion in 2022. With the help of those banks, it has struggled to retain advertisers and lost 70% of its value, according to OneMark. It's the banks holding the bag. According to new data from PitchBook, the Twitter takeover now represents the worst buyout for banks since the 08-09 financial crisis. The idea
Man, that's crazy. That is crazy.
behind doing this deal in the first place was put up the capital, do a deal that deepens the bank's relationship with one of the world's richest men, then turn around and sell the loans or bonds to investors who might have more risk tolerance or believe that Twitter, now X, would improve under Musk. Instead, banks have been unable to sell that debt without taking huge...
No, hold on real quick, guys. Of course. This is one of those silent ones. If you guys haven't hit the like button yet, take a moment, hit that like button. Also, if you guys haven't shared, make sure you share.
And hung loans, as they're called, dents overall profitability for the banks. It increases their financial risk, and it reduces liquidity available for other deals. It hasn't, however, hurt Musk's own ability to raise money for other deals. $6 billion for his AI startup this year, much of that from venture capital. And here's the key difference. VC funds, they get equity or ownership in exchange for financing, so they don't have to hold on to that in the same way, very different way. They also don't report quarterly, right? They can they don't have to mark down their investments every quarter like a bank might have to.
Always something to keep in mind here. Nevertheless, Deirdre, we just got some news as well I want to address. Shein, the fast fashion site, is now suing rival Temu for, quote, an unlawful enterprise built on counterfeiting, theft of trade secrets, infringement of IP
Shout out to P. What's good with it, bro?
They seek to infiltrate the U.S. These two, of course, have, you could argue, even taken share from Amazon. There's been fights over whether to include them in the NRF, whether they should have IPOs here, and so on and so forth. What do you make of this latest salvo?
It's so interesting to see them sort of battling with each other, right? These are Chinese-owned e-commerce platforms that have made huge inroads with the American
consumer. Shout out to Win Lose a Rug. What's good with it, bro?
Very similar things. I mean, on the surface, it looks like the business model is very similar. You're selling extremely cheap goods at a discount, sort of bargain basement prices, in order to gain more scale and build habits among American consumers. It's hard to understand what's actually going on because Shein is not a public company. It's looking for an IPO in London, but that means that we don't know what a lot of the financials look like. With Temu, which is owned by PDD Group, Pinduoduo, that's the Chinese company, we know a lot more about it. So it's interesting to see Shein sort of take on Temu in this way before they're going to presumably release their financials. I mean, it could expose them to similar claims, right? Both of these companies rely on the gamification of e-commerce, which looks like, and I'm getting up to speed on this myself, which is what Shein is taking issue with.
Interesting. Okay, I totally agree. I mean, it's an interesting strategy of trying to shine a light on someone else to say, "Hey, we're trying to, we're something, we're legit, we're okay."
Yeah, and there's questions about the Shein business model. So I do wonder if this is the pot calling the kettle black, but we don't know. And I think that is the bottom line for investors. Shein is not public. We don't know a ton about its business model and financial.
And I keep going back to they're popular with consumers. It kind of reminds me of TikTok. They might be hated for a lot of what is going on, but they are popular with consumers, and that's going to carry them some.
So yeah, speaking of TikTok, has anybody heard anything new going on with TikTok? Let me know if you guys have or not. So now here it says, as Bradford Ferguson, President and Chief Investment Officer of asset manager Halter Ferguson Financial, said in a recent YouTube video, suing your customers might be a little challenging for your revenues. It's clear that X is in a tough spot financially and something drastic may need to be done to keep the company afloat. So now we go to the fear of more Tesla stock sales. Musk might need to sell off some of his Tesla shares to deal with X's financial problems. This is making Tesla investors nervous as they remember what happened the last time Musk sold a large amount of Tesla stock. A few years ago, he sold about $40 billion worth of Tesla shares, which caused the stock price to drop significantly. All right. So, and that's a normal thing, right? Because when you're putting stock back into the market, you're increasing the supply. And if you increase the supply, that's going to drop the price, right? If you guys agree, give me a thumbs up. If y'all disagree, give me a thumbs down. So now here it says in the same YouTube video, equity analyst Matt Smith mentioned that Musk might need to sell between $1 and $2 billion worth of Tesla stock in succession to help X. Ferguson warned that this could cause Tesla's stock price to drop by 5 to 10%. Okay. So now they're asking about Elon Musk breaking his promise. Musk had previously promised not to sell more Tesla shares until 2025, but with X's finances in such bad shape, he might have to back off of that promise sooner than expected. In December of 2022, Musk hinted that if things got worse, he might need to sell off more Tesla stock around late 2024 or early 2025. Now, here's my question. Why can't he just figure out a successful business model? Yeah, DSB did kill it in that last stream. Facts. Check this out. Look at this. Speaking of DSB killing it in the last stream, I got a new drop. Watch this. Who remember that game? If y'all remember that game, throw some flames in the chat. If y'all don't remember that game, you know what I'm saying, and give me a thumbs down. I'm gonna play it one more time for y'all. Shout out to PJ Allen. What's good with it, bro? So now Here it says it wouldn't be the first time he broke such a promise either, because he famously tweeted in April of 2022, no further Tesla sales planned after today, but then sold billions of dollars worth of Tesla stock. Okay. So it's looking pretty bad for Twitter.